A couple major things spooked the market today. We're going to talk about an emergency meeting that is now scheduled for Monday by the Federal Reserve. And we're also going to talk about the rhetoric surrounding the potential invasion of Russia into Ukraine. So a couple scary things that I want to talk to you guys about in this video, so stick around. Hey guys, welcome back to TipRanks. I'm Richard Allen. Thank you so much for joining me for another video. If you watched my video yesterday, you know how I feel about all the fear, uncertainty, and doubt going on in the market right now. But I still want to bring you up to speed on the news that's happening really as we speak. The Federal Reserve has scheduled an emergency meeting, really an expedited meeting, but you keep seeing emergency meeting out there whenever you look it up. This is an expedited meeting scheduled for Monday, Valentine's Day. That's right, the day of love. The Federal Reserve is going to be talking about interest rate hikes. That's on the agenda. And they weren't scheduled to meet formally until March 15th and 16th for the next two-day FOMC meeting. Now, everyone and their mother who invests in the stock market and individual investors and retail investors and hedge funds and really everybody across the board expects rate hikes in March. They don't expect rate hikes next week. And that's what the Federal Reserve is meeting about on Monday. Now, is it a guarantee that they're going to raise rates next week? No, absolutely not. There's actually a good chance they don't, but they are discussing it. I don't know how these meetings end up taking place or who calls these meetings. There have been various Fed presidents around the country saying very different things over the past several weeks to several days. So there has been more hawkish sentiment out there with some Fed presidents saying, look, we need to raise rates by 1% like right away. That spooked the market as well. So is there a guarantee that we're going to see rate hikes next week? No, absolutely not. So I want you guys to know that. But that is something that spooked the market today, seeing some random expedited, what everybody's calling an emergency meeting scheduled for Monday. So I will be sure to let you guys know what's going on. It looks like it's scheduled for 11:30 Eastern Standard Time. So right before afternoon, I'll pay attention to what's going on, but it is a closed door session. They don't necessarily have to tell us what happened in that meeting, but there is a chance that there will be a press conference afterwards. If there is, and we learn anything on Monday, I will most certainly let you guys know as my love present to you, regardless of what the news is. You know, it could be bad. So the second bit of news I want to talk about is what's going on with really, and I say the rhetoric around the Russia-Ukraine situation because could Russia invade Ukraine? Could it be really, really bad as the White House is saying right now? Yes, absolutely. But the White House is coming out and saying essentially that it is imminent. Russia will invade Ukraine. They've come out and asked all U.S. citizens to leave Ukraine, not only embassy employees and family and staff, but all U.S. citizens to leave Ukraine because they may not have a chance in a couple days. So those are really scary things that also spooks the market. It sent oil prices absolutely soaring to a 7-year high. That was something that definitely was an effect of this situation with Russia and Ukraine. And it sent the stock market really tanking. So we're going to take a peek at the major indices here really quick on TipRanks.com. The S&P down 1.9% on the day after really what looked like a solid start to the day. The Dow Jones down 1.43% today. NASDAQ down a full 3 percentage points. So a big loss there to really end the week poorly. It wasn't great for any of the major indices. And then we have Bitcoin right there. You can see that right there, down 3% on the day as well. Ethereum down 5.5%. I do want to touch on cryptocurrencies really quick before we finish talking about the Ukraine and Russia situations. There is a potential catalyst. There's a Fed presentation and speech going on next week talking about digital currencies, digital dollars, essentially for the Fed. So that is something that could also spook the crypto market. So pay attention to that late next week as well. But the markets reacted very poorly to all of this news today. And it's been a tumultuous, really tumultuous time in the market. I want to show you some data from the last time Russia and Ukraine decided to kind of fight. I don't know if you guys remember back in 2014, Russia came in and took the island below Ukraine, Crimea. They annexed Crimea from Ukraine. And this situation didn't have that much of an impact on the market at all. So this happened between February 2014 and March 26th, 2014. But I wanted to show you the big picture for the S&P 500. I wanted to include the 2008 crash in here. I wanted you to see the 2018 crash and the 2020 crash and the most recent big dips that we've had in the stock market over the past month. I wanted to show you guys that because if we zoom into this 2014 here, guys, like right here, wasn't much of a reaction to the market. In fact, those 3 weeks, 4 weeks in the market, it was about a month, the market went up. So the market didn't have much of a reaction to Russia and Ukraine. Now, this could be much worse with more eyes on it, more people paying attention to the markets right now with the recent, just surge in retail investment. People could get more and more spooked than they certainly did back in 2014. There are far more people investing in the stock market and managing their own money than there was back then. But I don't think we know the impact it's going to have on the market. The market certainly moved today on this news, but I think it was a combination of a lot of things. Could it be bad for the markets? Absolutely. But again, we don't know for sure. You're getting a lot of people talking about selling everything. I'm selling everything. I'm getting out of the stock market. There's just too much going on. No way I'm going to keep my money in this stock market. Over time, we recover from these blips in the stock market. We recover from the 2008 financial crisis. We recovered from the 2018 and the 2020 stock market crashes. And we recover in a bold way, usually, over time when you measure it out over decades. So something to keep in mind in the markets. The markets always recover. I have faith in the U.S. economy long term. I believe the Fed does have to move on inflation and rate hikes soon, but I don't know how bearish they will be on the markets, or hawkish on the markets rather, because of the big dip we saw this last month. The NASDAQ had its worst month in almost ever since the 2008 financial crisis. So it was a bad time in the stock market. The S&P had its worst month since March of 2020. So it could get nasty out there if they start raising rates and surprise us with higher rates, especially if they surprise the market with a rate hike next week. We could see some volatility in the market, and I said that yesterday too. And I'm not telling you that to spread fear. I'm telling you that just as a caution for you to be able to manage your emotions, I think, in a good way, in a positive way, because there is going to be some ups and downs. There always is in the market, but eventually it gets better. So thank you guys so much for joining me for another video. Try to have a fantastic weekend. If you learned something new or found any value in this video at all, let me know by hitting that like button and that subscribe button down below. And as always, I'll see you in the next one.